Hello. Today I'm going to talk about the strategy analyzer and how to apply it and its results appropriately for your trading decisions in making coin choices. Now, first and foremost, let me state that you should not place any alerts at all against the strategy analyzer. The analyzer framework is a module to be added after the fact. Your alerts should be added and done on the module that is the last one in your chain. And as you can see, I've actually just shrunk the entire strategy window down since it's not really needed. Everything for the analyzer is done here. Now, when picking your coins, you really need to look through all of your coin choices. And I'm going to show you what I look for as a basis of what determines a good coin. I'm going to start with the Jackrabbit DCA recipe. This is just a straight Jackrabbit, no special settings. My typical DCA settings. For the purposes of this discussion, our main focus is going to be the analyzer. So I'm going to use different setups and recipes here and there on random coins to demonstrate what to look for. Right now we are on ADA, and you see it has a 90% success rate, 86 trades. Now this looks back 5,000 candles. So 86 trades on 5,000 candles at the 5-minute mark is roughly 2 weeks, I think. So basically 288 candles in a 24-hour period. It's roughly 17 days worth of information that it uses to look back. So, in 17 days total, this is going to produce $21 of profit, 86 trades, 90% success rate, and a 19 factor for profiting. And there will be an average of 200 candlesticks or 200 bars between trades. Now you can look at your performance settings. Your gross loss needs to be minimal. This is under my base order size, so that means I'm not looking at any exit orders here. If this number climbs, then you're likely hitting exit orders, and you want to be careful with that, or exit positions. And of course, you can look at your trades to see exactly how well they are doing on the basis of this trading recipe. So ADA produces $21 in a 17-day period. Let's go to Algo. Takes a few minutes for it to load. And you'll notice it makes $19, 80 closed trades, and an 85% success rate. And you'll notice the chart shows only climbs. Now let's move to another coin altogether. Let's go to Dash. Let's pick a coin that has try to find a coin that has a low success rate. Okay, only 37 trades. I personally don't like trading coins that will only generate this level. This is not a good level. So that is something to be aware of when you're looking. Try to get the most trades possible. Okay, let's change and go to a different layout. Let's go to the MACD MA version 5. It has been extremely successful lately, but let's see how successful. Okay, it's pretty consistent with ADA. Let's try BAT. I often trade BAT, so let's see how it really does. Speaking of ADA, on the screen, be sure you always check. You want the highest numbers here. And the same thing with BAT. This particular strategy does well. $17 for 66 trades. Nothing out of the ordinary here that would make me be concerned with it. But let's check another coin. Okay, you see the drop here? This is a good indication of an exit point. But when you look here, you don't see anything close to the order size. So you did not encounter an exit point. Let's see what this setting is. Okay, let's go to 11 and see if it creates an exit point that I can demonstrate. Okay, you can see low percentage and the spike right here. So this definitely suggests there very well may be an exit point. Of course, searching the history for dollar cost averaging will in fact determine that. So let's see if we have indeed an exit point on this coin. Remember, we're looking for the red triangles at the top. This coin may just be a difficult coin to trade, but no, it's not. Lo and behold, we do have an exit point right there. So when you see sharp spikes going down, or you see this situation here, check for an exit point. You'll also see your profits here are lower and your percentage of success is lower. Now let's pick a coin that has a tedious history. Love it or hate it, it's a popular coin on the market. And that would be Matic. We'll let the chart load and we'll see how well it does. As you can see, a major situation here So this one took more than one exit point. Something to be aware of. Now let's not stop with that. Let's actually load a different strategy altogether. Let's see how well Matic does with that. So let's go back to Matic. And you can see Matic does not do well at all. In fact, the analyzer says it is going to lose quite a bit of money. It makes a good amount of trades, 43% success rate, but you're going to lose $40 in 17 days. So it's something to be aware of. Now, what can you do to make this more profitable? Well, obviously changing recipes is the first start, or tuning your recipe. Let's go to, well, first let's get to the right module. Let's shrink this. And notice it doesn't use dollar cost averaging at all. Now that's interesting. So as you can see, dollar cost averaging isn't even used. Alright, so it's on the moving averages. So let's add dollar cost averaging and see if it makes a difference. Let's see what impact we actually have. Dollar cost averaging. We're going to attach it to the moving averages. Let's turn off the signal line. And I want to go strategy based only. I want to keep everything reasonably controlled and not have artificial entry points. Let's take my take profit to 1.5%. And I only want to spend roughly $111. 10 positions. So let's see how well this turns out. And the strategy analyzer will need to be set to the dollar cost averaging signal line. So now let's see what it says our profit is going to be. We already know, so we've gone from a loss to pretty much a split. So that tells us, come here, $100 is not enough, or 10 positions. Let's go to 20 positions. Now, I don't want to close this window because I want to play a numbers game here. Pressing enter on the box will reevaluate your strategy without having to close this window. So you can, in essence, begin a game of numbers. So 20 positions doesn't work. Let's try 30 positions. Meaning it can purchase 30 different positions before it exits out as a loss. Okay, it still hasn't changed. So let's see. Let's turn this into a savings account. Let it accumulate as many positions as it needs to clear this coin off the board. And it still doesn't change. So as you can see, by actually looking at different numbers, different situations, you can see clearly just how profitable you are going to be. And you can find out just how well your coin is actually going to do. This coin doesn't do well for 3 different strategies I've tried. So let's go try another strategy. Let's look at all my layouts. Let's try a more surgical strategy. And let's actually see how this strategy works. Now it's loading Bitcoin. Okay, let's go back to the overview. It makes 12 trades in a 17-day period. It has a 75% success rate. And it makes a $15 profit. Now, that profit is on the basis of how I would actually trade. And notice here it says an order size of 100. Let's go down to an order size of 11. I put my commission in that I would have to pay. And of course, I turned on both of these so that this is evaluated on real-time data. So, using what I would normally trade at $11, this strategy is only going to produce a profit of $1.74 per day. Or excuse me, per the 7-day period. 17-day period. I'll get it right yet. Notice how long it holds the candlesticks. So this is not a strategy for minimum position points. It is a strategy that's long-term and requires a significant position and accumulation to make it beneficial. That's important. Numbers like this are important. Okay, we see here exit breaker apparently. Let's go find out. Okay, still looking for this exit breaker to find out where it hit. Remember, we have 17 days of history here. Carefully search out the area. And so far I'm not seeing any exit breakers. So let's go back into the strategy tester and let's look at the performance. Okay, $10. This is definitely what you would look for an exit breaker. That's close to the original position. So it did take an exit position. Where? still looking. Okay, that is all the way back to 17 days. I have no idea where I took the exit position at, but the numbers definitely suggest that it did. So let's move this to full screen. Let's actually look at our trades. See if we can figure out what's going on here. Okay, it's taking a short. I see the problem. So if we see this, we need to disable shorts. DCA needs to be tuned appropriately. So if you see that, make sure you disable your shorts. We will only evaluate long positions here. That's better. It's still only 15 trades, only $14. For a surgical position, that's not a lot for $11. So let's make each position worth $100. $1,300 candlesticks is quite a bit of holding time. That's almost a 20, no, that's actually 3, 6, 9, 12, 5 days holding period as an average. But still, if you have the capital for this kind of a procedure, it will do a good job. So make sure, if you're using dollar cost averaging, make sure your strategy settings for the analyzer are appropriate to dollar cost averaging. Shorting on DCA in a long position won't go well. So let's try a coin that has a dubious history. One that is very difficult to trade with on a general basis. It should actually be considered a stable coin because its market fluctuations are very minimal. And that will happen. We'll get calculation errors. Just go back and forth and it will correct. But let's actually go to something a little less conservative and a little more aggressive. Let's actually get an idea of what this will look like. So let's go to the bottom. Let's go to XRP. And let's make sure we don't make the mistake we did last time. Shorting is off. So, XRP, only $7 for 17 days. And this is a very aggressive trading style. In fact, if you take and you actually go based upon the JR-Lean module itself, you'll see it's very aggressive. And it might actually break the system. Okay, it doesn't, which means it's under 9,000 trades. Okay, 91 average bars, 56% success rate, but it loses money. So you want to be careful with using JR Link in this current market. So let's go back to DCA. And let's see if we can find a coin that will do better. Oh, ZEC has been a hot topic lately, so let's see how it does. These numbers need to be kept low. The lower these numbers are, the more trades you make. The higher this is, the more confidence you can take in the results. The higher this is, the more profit you will make in the general long term. And of course, the better this is, obviously the more profit you will make as well. So all things to keep a watch of. Okay, let's pick another coin that people like to trade for some reason. As you can see, it's not that hard to find good coins. Looks like an exit breaker. We already know we're in the right direction. 204 candles per within a trade, 78% success rate, 103 trades, $15 profit. So, let's look at our performance. Okay, we're at $10. This definitely looks like the hallmarks of an exit breaker or an exit position. Let's go to the trades and see. It might just be small losses that add up along the way. And that really looks like it is. So always check all of the metrics to determine everything appropriately. Oops. So always look at your coins. I personally recommend you go through this list. Look for the highest profit once you've established your budget. The first thing you should do, though, is always establish your budget with your exit position. How far do you want to go into the game before you said enough is enough, I need to move on? This is your first point. 10 positions, $11 each, $111 budget per coin. That is all I want for my personal risk assessment. Next step you want to think about, and this may just be trial by error, do you want to use a strategy or do you just want a flat take profit? We have $15 profit and we have a $13 profit. We actually lost money. So the strategy gave us more money. Now, dollar cost averaging, fixed percentages, or strategy buys. Now this actually gave us more money. So let's try fixed percentages and selling with the strategy only. Different combinations to always look at. and it didn't look like this did much difference. So it looks like take profit might be slightly better here. And if you have this problem, just change the time frame and then go back. This is typical with TradingView. So always look at your coins. Always try different settings to try to maximize this value. The more you make here, the better it will be on your balance sheet and on your budgets. This is a major factor. Higher the better, the lower the better. So let's put this back to strategy and see how well it does. Not much of a difference in terms of the number of trades. So not really a coin I would personally trade on. But as you can see, take the time to really look at your coins. Take the time to figure out what coins are going to produce the best profit with least amount of risk. And take the time to tune your combination. This is a simple combination and it does fairly well, providing you have the right coin. Coin choice is everything. Don't ever forget that. Your success depends upon the choice of coin. If you have a good, solid coin, you're going to have better results. Your higher market cap coins are going to be least productive because they are considered more stable. Good coin, high count, low value, nothing that stands out for drops. Coin I personally would want to trade on. I'm not happy that it's a low market cap coin, but the metrics speak for themselves. This is a coin that should not be ignored. Now remember, your profit is on the basis of roughly 17 days. $13, lower number. Not a coin I would choose over the one I just had. Slightly better, lower count though. Different signs of an exit breaker. $18. Definite signs right here for gross loss. It might just be a cumulative loss though. But still not necessarily a coin I would want to trade on. These are the kind of things I look for that are red flags. Now you could raise your budget level and see how well it does, and that might fix the problem. But I don't want to raise my budget. I don't want my budget to go above $111 per coin. This is a good coin, good number, low count. The kind of coin I would trade. So, take your time using the strategy analyzer. Take your time testing it, looking at the different metrics, and actually spending time understanding the results. Be aware that it's not perfect, but it can give you some fairly reasonable results to work with. Tune it appropriate to your own investing. Take the time to fill it out. If you have the budget, go for it, put it in, see what it tells you. If you pick, for example, 5 coins at $11, you've broken even pretty much at the end of 1 month with a $20 return every 17 days. So for $500, well, I'm going to say roughly $600 to give the overage. Now, you see here, this is a better coin. If you have the ability to put $100 in per position, that means this would be $200, this would be $200. This could definitely break even a lot quicker. A $218 profit off of 1 coin in 17 days is good. So always look at what you can afford. Always look at exactly what your basis is going to be. Even if you can only afford $111 per coin. 5 coins, you've broken even at the end of 1 month. So basically 111 times 5, $555 budget. So safe amount, $600 budget, you will break even using this very simple strategy. This you can take and use as a basis of your budget and your break even. If 1 coin can produce this in 17 days, 5 coins will break even. So look for high numbers here. Lower coin numbers here mean you won't break even. Take your time, look at the numbers. Until next time.